investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. She has ambitions of becoming a brand. Business Standard.
Hello, everyone. Welcome to the third session of Unlock BFSI 2.2 with Business Standard, our financial conclave that's decoding the new normal for BFSI with leaders from the industry. For those who have joined us now, we have discussed the overall economy and the fintech space in the earlier sessions, and we'll have panels on mutual funds, insurance, and banking going ahead, including a keynote address by the RBI governor. Do take a look at the schedule on bs.bfsi.com. And today, we have heads of small finance banks with us to talk about the way forward for the sector. We would be happy to take a few questions for the panelists after the initial discussion. Please send them in the questions box on the website or as comments on Facebook if you're watching the Facebook Live. For social media conversations, use the hashtag BS_BFSI. May I now request Mr. Tamal Bandopadhyay, our consulting editor, to start the discussion.
Thank you, Manish, and hello and welcome to the third session of BFSI Unlock BFSI 2.0, a business standard initiative. After discussing what's happening in Indian economy and what's happening in the digital world, today we are with the Small Finance Bank, a very important and critical component of Indian financial system, the newest kid on the block. The subject today is Small Finance Bank. It's time to make it big. Well, it's not exactly, play with the word is small and big. It's what we would like to say that, or we feel is there's a big opportunity for the small finance bank in this COVID pandemic time to make it big because the clientele that you serve is very, very different. Their cash flow is different. Their business model is different. They can get back to life faster than the normal corporates because you are there in the hinterland. Many of you, of course, you do have your exposure to our India as well. But this is a challenge, but more than the challenge, a big opportunity for you to prove to the world that the Indian experiment in the financial system is a success, and probably this will give you bigger strength and on your way to transforming yourself into universal banks. I'm happy to see is an excellent combination of panel. We have Ujjivan, Equitas, and AU Finance. All three are listed entities. We have Jana and Suryodaya, unlisted entities, but waiting to be listed. I wish, I'm sure had there been no COVID pandemic, you would have probably by this time on your road shows. And finally, we have MFIN, the SRO CEO, Alok Mishra. So let's start, and it's a normal thing. We'll have a few rounds. Each of you will talk probably for a few minutes on the subject, and then we get into micro pieces. So let's start with probably let's say listed entity, and we'll ask Sanjay because your business model is a little different from others and all. So everybody wants to know what's happening on moratorium front. I'm not asking whether moratorium should be should be extended or not, but what's the impact of moratorium? How much? Because as we know that Indian accounting system that we follow, even if you don't earn the interest, you book the interest, right? And I don't think you tell us that, look, I have booked 100%, but actually 80% have gone in, have flowed in, 20% has not come in as yet. So I don't know, to the extent possible, you are a listed entity. I don't know what you can reveal, what you can't reveal. But starting with you, Sanjay, if you can get us a sense, the impact of moratorium on your businesses. And when I say impact, I want you to explain to our audience from 31st March it started, right? End March it started. So from April and taking us through, is it getting better in terms of people paying you back, or is it getting worse? With some numbers. I end here, Sanjay.
Yeah, so thank you, Tamalji, and good evening to all. As you know, Tamal bhai, this is very uncertain times, unprecedented. So I don't think that RBI had any option, except allowing customers to get this moratorium, right? So and as a personal banker, I feel that it is a right way to handle this crisis, because if customer is not able to earn, how will he repay that, right? Being an AU, right, we are into vehicle finance, SBL, small business loans, we are into housing loans, business banking. So we are not a microfinance lender. So my story can be different from my all
Yes.
colleagues on this call. But I have seen that, people actually, if you really see, the strict lockdown only happened for first 2 months, from 25th of March to maybe 30th May, right? And unlocking started from 1st of June. We already have come out with our results, and we have already disclosed that our collection efficiency, has improved from 50-55% from April, May to 90% in the month of June. And because there's a wider audience, I can say you that that percentage is firming up in the month of July and August. So one thing which is very good around this scenario is this, that in spite of the option or right, in my opinion, with the customer, that he can't pay to me, right? He has a choice that he doesn't pay to me, right? But in spite of that, if my collection efficiency is 90% above, that shows the resilience of the economy, right? And the whole intention of a customer. Because at the time of April and May, we were all discussing that there might be a customer behavior change. He might not even want to pay you, correct? And economy might not come back. So I would say in last good now, what 2 month plus this 20 days is close to 80 days of unlocking. Barring 3-4 sectors, everything is coming to normalization. Of course, the volume is not there. Of course, the continuity has broken, because this is one of the 100-year event, right? So we have to accept some kind of effect or impact negatively on some sectors, some customers, some markets. So I would say, and accounting has to be done like this, because it's not which I'm writing off them, right? Because if you are writing off everything, then how the banking can survive? Because we
Sure.
have to pay the depositors also. But the prudent policy is this, that you can make some provisions, which we have done, right? We have done in quarter 4, we have done in quarter 1, and as we move forward, we will create, right? But I would tell everybody that things are not so bad. Things are
Okay.
not so bad, right? Things are coming back. Customer has a lot of intention to pay, and that we have seen in our working, and the kind of 90% plus customer activation, the kind of 90% economy coming back. For me, economy coming back is that business itself is opening up, right? Of course,
Yes.
the volume can be 60-70%, but you have also got the moratorium of 6 months, right? You would have saved some money, correct? So I am seeing, maybe not we, maybe a little bit tilt you, in terms of my collection recovery in months to come. And now we have restructuring also in place. So if any customer comes and want to have a specific help, we can do that, right? So in my opinion, moratorium remain very, very good for people to handle this crisis, and the kind of collection efficiency we have seen is very encouraging.
Sanjay, it's great to know that from 40% beginning in April, and now you are saying 10% only are not giving you money at this point
Yes.
of time. No, I'm not finding fault with the accounting system. I'm just made it clear to the audience that this is how we account. And you just mentioned that barring a few sectors, can you just give a one-liner? What are the sectors that still is painful?
So for us, honestly, it's like schools, So schools, we fund lot many schools, and then the school allied activities like school bus and teachers, all those things are not opened up, and there is a lot of controversy around whether fees will be paid or not paid. So that sector is not coming back at all. The all luxury related items, like lifestyle related items like the gym, the electronics, the high end apparels, is looking little bit subdued, and of course the hotel industry, which is not up to the mark, but that is a lean period also, right?
Okay.
So these are 4 or 5 things which is related to
Okay.
our market. Otherwise, I'm saying all the discretionary, non-discretionary things are coming back.
Thank you, Sanjay. And I think the difference between you and other SFBs are there. In your case, your almost all the loans are backed by collaterals, right?
Yes.
Unlike
Yes.
the microfinance where it's a
Yes.
non-collateralized loan. So
Yes,
let's
yes.
we'll hear the listed entities first, because that's where the investors' interest, and then we'll go to the others who are not listed. So Vashu, tell us what is your you also have a very interesting combination, diversification of assets, roughly 30% odd in auto and consumers and other sectors and all. So give us how this moratorium is panning out for your small finance bank, Equitas.
Thank you, Tamal. Thanks for having us on this show of yours. This is becoming a very good branded show, I should say, and there's been a lot of interest amongst a lot of people that I know to be watching the series of programs that you people are conducting. So it's good. At least you are keeping us engaged and enabling a lot of sharing of information during this pandemic times when we are all sitting at home. So thank you so much for having me here. Um, in terms of the impact of the pandemic and impact of the moratorium, etc. We do have a slightly different book compared to other
Sure.
SFBs, including AU. We have 23-24% microfinance, 25% is commercial vehicle finance, 40% is small business loans, and 5% is MSC, and 5% is NBFC lending. So that's our spread. And if you look at it, 90% of our business is really for the informal economy customers, and where typically the loan sizes, you'll be very surprised to know that if I include my microfinance borrowers, then my loan size, average ticket size is 62,000 rupees. And if I exclude my microfinance base from the calculation and calculate my average loan for the rest of the entire asset base that we have, it comes to about 4 lakh rupees. So that's all is my average ticket size. So we are really, really focused on the low end of the customer segment,
Yes.
where there is no documents, there's no papers, there's no income tax return, nothing exists. Nothing means absolutely nothing exists. And we have to do a lot of very diligent cash flow assessment, sitting in a shop, watching his footfalls, watching the number of sales which takes place, extrapolating to a monthly sale, doing vendor verification to reconfirm whether our calculation on sale is correct. All kind of effort has to go in. So that's the kind of business that we do. And so these people, almost in all our cases, practically most of our borrowers, we are the only banker to them. There's no other lender to them. And the demand in this segment is very large, very huge and unmet demand. And so there's always a huge unmet demand which is there out in the market. And so mostly it becomes that we are the sole banker to the customer. And right across our product lines, we don't have DSAs. We have no DSA sourcing at all. So it's always sourced to 90%. I mean, most of the transactions are sourced through our existing customer references, and the remaining are sourced through direct marketing by our own staff. So because of a combination of no DSA, direct and customer referral sourcing, and we being more or less the sole banker to the customer, so the level of relation that we end up having with our customers is very strong. And almost all our customers deal with daily use products and services. I mean, Sanjay was explaining that some of the sectors, they have been running into some trouble because of the lockdowns and all that. In our case, practically all our customers are into daily use products and services. They are not into really the luxury or discretionary kind of products. And so when there is a lockdown, it's just complete stoppage. That's it. There's nothing left. When there's a lockdown and he can't open his shop, his income
Yeah.
is zero, total zero.
Yeah.
There's nothing that he can do about it. And the profile of the customers to whom we lend, you can't expect that they will be having a lot of savings and they'll be making their EMI payment out of savings. It doesn't arise. It really doesn't arise. So when they can't earn, they don't pay. But when they earn, they will start paying. And the speed to recovery, I think that's a critical thing. The speed to recovery is very fast because of the fact that they deal with daily use products and service. Like, I keep giving this example. I have a two-wheeler mechanic guy, which is close to my house, and he's one of our borrowers. Every time I go, I try and see what's the level of activity in his shop. And now, post the lockdown being opened up slowly over the last maybe a month, 2 months, and all that. Today, when I go out, I see his shop as busy as it used to be before the COVID period, right? Pre-COVID period. So it's a non-essential service. Essentially, it's a two-wheeler repair shop, but The fact that people are allowed to come onto the road means that somebody has to get his two-wheeler repaired all the time. So the speed to recovery of these kind of businesses, because of the fact that they are daily use products and services, is generally very fast. So unlike Sanjay, we started with a very heavy level of moratorium, very high moratorium.
How
And
much is that? How much heavy?
I'm going to tell
60%?
you,
70, 80?
you
Tell
have to
us.
keep,
Yeah.
you have to keep guessing. So we started at 90% moratorium.
Ooh.
Yeah, we started at 90% moratorium, but we were very comfortable. I mean, we were never at any point in time, we never put pressure on our customers. We never panic because it's not required. It's really not required. I mean, there's a time when my customer needs support and not pressure from me. And I just mentioned to you the profile of our borrowers. So you really don't want to go and mess up with this kind of borrowers at all. And our relation is not one of April, May, or June, July relationship. I got to continue the relation for the next 3, 4, 5 years. So even if I don't collect in June or July, it doesn't make any difference. So long as the customer is not earning, I have no problem not collecting. The moment he earns and not pays me, that is when I want to get worried, and that's when I want to get into action. But if he is not earning, I'm quite happy to sit with him and kind of give my shoulder to him to cry on and walk, because I know that when he starts earning, he will pay. And the speed to recovery, as I mentioned, is very fast for these customers. So we started at a 90% moratorium in May, and then it dropped down to 50% in June, and then it dropped down further to 43% in July, and probably it will fall further down as we go by. And today, right now, I'm sure all the SOBs are adopting. I'm sure all of us are following similar actions in terms of getting back to our customers and telling them that effective September, there's no moratorium. You got to start life as normal. Life becomes
Okay.
normal, because all of us, we're sitting at home and poring over RBI guidelines and all kind of newspaper reports. We all are very clear that moratorium ends in August. But for a person who is wanting to open his shop, and then every day he has to just read whether there's any local municipality change in rules and regulations, whether he's allowed from 10 to 5 or is he allowed from 11 to 6 to open his shop and all that. For him, it's not that, moratorium is the top of his mind and he's figuring out when moratorium ends. So he will probably not even know that moratorium is going to end in August. They wouldn't even know about it. So just to, financial, literacy, getting back to them, confirming, I mean, giving them this feedback that moratorium is actually going to come to an end in August. I think that itself is a major task, and we have a lot of our people are engaged in that task. So this, I think, is a time when people like us, the kind of segment of customers that I deal with, I think the people like us, we really need to be with the customers, spend a lot of time with them,
Sure.
educate
Thanks.
them.
Yeah, thanks, Basu. I understand. It's an amazing story. We'll get into the micro pieces later. So Sanjay, AU Finance, a listed entity, said it started with 40% in April and gone down to 10%. Basu, I mean, you are so brave and courageous. You are saying you started with 90% and has gone down to 43%. The third listed entity, Nitin, former HDFC, techie and now a boss of listed small finance bank. Nitin, give us your sense.
So I think there is no doubt that the announcement of the moratorium, the mechanics of the moratorium was extremely timely, and it was required also, because there was complete uncertainty about what's going to happen to livelihoods as the whole lockdown related issues were unfolding in front of us. Now, because 77% of our portfolio is microfinance, right, and it
Yes.
completely depends on field operations. At least till that time, it did depend on field operations, which meant that we have to go into the field and collect money from customers. We could not collect starting 23rd of March. We in fact suspended our operations from 23rd of March only, 2 days prior to the lockdown. So when you can't collect, then there is no way of going and explaining to customers, because you can't move around, the customers can't move around. So we took a call that we will offer moratorium by default to every single customer of microfinance. We also wanted to stand by our customers, and we encouraged our teams to get in touch with all our customers. So between 25th of March till about 10th of April, we completed calling our entire customer base, explained to them that yes, there is a moratorium, and this is what they get, and this is what they need to not worry about, that the bank is there for them. Now, when things started to, and this is sorry for the microfinance, but for the non-microfinance business, we had the option of also getting in touch with our customers. And we have two other businesses which are reasonably large: affordable housing and MSE, the micro and small enterprises. There, because the repayment cycle was a little due in April, we had the chance to get in touch with every single customer and actually ask whether they wanted a moratorium or not, and explain to them that you have the option of extending. Now, that is where the small finance banks, I think, are very different from the large banks, because we saw that everybody did come up with a policy. Some people took time, some people like us, immediately came up with the moratorium policy. But most of the banks said that you come and ask for it, then I will decide whether I want to give it to you or not. I think we were brave enough to say that we will give it to everybody. We want to stand by our customers. So that was one remarkable difference. And later we did see that almost the entire microfinance industry did pretty much the same. So even the largest bank in microfinance also reported a 90-95% moratorium levels, because that's the nature of the industry that we work in. And when things started to open up, and we were also in touch with our customers, like I mentioned, so we were also getting a sense of what's happening on the livelihood side. So people said that I have no work, I have savings, but there is nothing that I can do because I can't open. Uh, for us, we have a large proportion of customers who deal with now what we understand as essential services, groceries, dairy, agri, the rural portfolio. So those customers they did keep telling us that, there isn't so much of an impact. Yes, there is a shrinkage in the demand. So they are not seeing as many customers coming to them. So obviously their cash flows were dented to a significant extent. But they also said that we see recovery. We see recovery in demand, and that gave us the confidence and the optimism that yes, what we always believe in, the inherent resilience of this sector, the informal sector or the lower income sector that Vasu also spoke about, there is inherent tendency for them to revert back to mean, because they cannot stay out of economic activity. And we maintained this. All the investor calls that we had, all the media interactions that we had during April, we kept saying very forcefully that we are very confident that our customer segments cannot remain economically inactive for a long time. They have to go back to their livelihood. And gradually, as things started to open up, we saw that people also came back and said, yes, I thought I would be able to pay you, but I probably need a little more extension. These were customers on the small business side. So I said, no problem, you have the option of extending it till the end of May. There is no problem. In June, when we started to go back in the field, I think that is where we started to make a difference in terms of actually being able to collect. And there were customers who told us even in April, saying that I have the money to pay you, but there is no way that I can come and pay you. There is no way that we can go and collect. In spite of that, we had some 77,000 customers in April who made a trip to the branches and deposited the repayments, right? So there was no reason for us to doubt the intentions also. And that also gave us a confidence that, this is going to go back to the recovery levels that we expect. In June, we also obviously stepped up on our field operations, starting with May. In May, I think we were just about 15% collections efficiency. In June, it went up to about 43%, 43, 44%, 47%, sorry. And by the time we finished July, we were already at 60, 61%. Okay, and it's improving because customers are saying that, here is the money I can pay. They're also aware that there is moratorium. So I don't think there is an awareness issue. What we've also done in the meantime is that we've educated them about, what it means to be taking a moratorium or not taking a moratorium. So I think we are clear that it was a timely step. It came in time. It did help the people who really needed it. We don't see any issues coming out in terms of either misusing it or an intent issue. We also reaffirmed our purpose, saying that we want to stand by our customers. We also went out and helped the communities that we work with, as part of volunteering and whatever else that we could do. So we stayed in touch. And I think we are completely grounded from that point of view. We know exactly in which occupation, what is happening. So if you ask me that which are the people who actually got impacted or are going to see a longer impact, those are people who depend on like working in restaurants or I have a secondary source of income for driving or those kind of occupations, which will obviously take time to recover.
So you are saying your collection efficiency is back to about 60%, 65, 66%. That's what you said, right?
As of July.
Yeah, 60. So 65, 66% for you, for Sanjay 90%, for Vasu 43%. That's the right.
My 43% is the moratorium.
Oh, sorry, the other way. So 57% is the okay. So we are left with two unlisted entities, Bhaskar Babu and Ajay. And finally, Alok, I'm keeping you on hold the last because you're in industry, you have a industry view, so you can give us a sense even for everybody what's happening. So I'll talk to you later. But Bhaskar, you operate in Bombay. Your headquarters is the only SFB in Bombay. I mean, New Bombay. Bhaskar, give us your version of what's happening in your Suryodaya SFB.
Yeah. Thanks, Namal, for hosting us. The story is pretty much the same what Nitin and Vasu told. I think the month of March when it was announced, good that the moratorium was announced in time. The difference between the crisis that we went through or what challenges we are going through compared to Demon is that in Demon, there was no moratorium. We'll have to keep in touch with the customer. We'll have to kind of, even though there was an income loss, we're all at it in terms of asking the customer to repay, getting in touch with him. Since the moratorium was announced, I think broadly the entire microfinance sector, specifically the small finance bank with a heavy portfolio in microfinance, took a call not to really even approach the customer, because the moment you start making them feel delinquent, the behavioral change is a little different. So the moratorium helped us all. At best, I think all we did, what we did was in the month of April, use this opportunity to get in touch with the customer. Not even to explain moratorium, not even to ask for payments. Just kind of checking whether all is okay. And if there is any SOS requirement that we need to cater to, as Nitin mentioned, getting into activities where there are a few customers who went completely out of income. They didn't have groceries to even feed for themselves. They were in hundreds. So we could do that, or there was a migration in cities like Surat, where we had to kind of pitch in and help. What it really helped, the moratorium, is that we were not chasing the customer for collecting payments. So the moratorium, rather by default, like everybody was given a moratorium, and the collection, the people who exercised or didn't pay in the month of April was 97%, both by value as well as by numbers. It would have been a panic mode in a regular scenario that 95% of the customers are not paying. Here we said, hey, this is what we're doing. What we did in the process is that opened up a small, the advantage of having been a bank is that we can give working capital product, OD product. So we opened up limits for 5,000 and 10,000 just in case you want, irrespective of what they were repaying, that the repayment was excellent till the month of February for sure. March, probably the last 10 days wouldn't pay. So the very fact that you're telling them that we are in and that you're not putting pressure, the customers didn't really feel that they're defaulting. So the narrative of asking for a write-off didn't happen at all across. I don't think anywhere in any part of the country today, at least in microfinance, the narrative changed because of a crisis or a challenge, which many times happens to going towards asking for a write-off, loan waivers. Didn't really happen. So it was business as usual. The bounce back was pretty sharp. I think across the board, probably the numbers will be varying in terms of whether it's a 55% collection or a 75% collection, depending on which states, which cities you are in. We happen to be in Mumbai, we happen to be in Pune and Chennai as a large part of our portfolio, around closer to 20-25% of the portfolio. We just couldn't reach the customers. So suddenly we realized that around 15% of our customers were willing to pay and were paying through the digital mode. That was a complete surprise for us. Around closer to 1 lakh customers paid through the digital means, through UPI. We sent the link and then they made the payment. Were we able to sustain it or scale it? The answer is no, because the whole thing, when we started getting in touch with the customer. So the collection percentage in July went to around closer to 60%, just short of 60%, around 57. The trend we are seeing in August, it will probably move beyond 70, closer to probably even 75. I think all of us will be hitting the 90-95% mark in the month of September, October, or November, depending on various products. The question is, beyond 90, how much of a residue is going to convert itself into a loss portfolio? And for that to be geared, two things are important, specifically as a bank. I'm sure for other institutions as well. One is capital adequacy. The other one is liquidity. As things happen that I think all of us are substantially over liquid than required, I think if both is intact, if you keep the customer connect, my belief is that without even pressurizing, I think as Vasu rightly said, we'll have to keep reminding them that August is over, September is starting, and wherever in cases it is required in specific pockets, we'll have to be prepared for restructuring, a one-time restructuring.
Thanks, Bhaskar. We'll get into the restructuring, capital, liquidity, etc. But all of you are telling almost the same story, which was as bad as 90% plus non-collection, which was in April, now is going up, and depending on it varies from 60%, 70%, even 90%. So Ajay, you are the last person. The same story, and before that, I must have a disclaimer for the audience. I have a relationship with Ajay's bank. I'm an advisor to the bank, so I earn on some fees from your bank. So that's my disclosure, but I must say that on upfront. So Ajay, tell us what is happening in Jana the same way in terms of moratorium impact on your business.
Thanks, Namal. Very similar story. So 93% moratorium in April, down to about 33% in July. We have two parts of the book, the microfinance book and the non-microfinance book. The non-microfinance book is largely affordable housing, MSME, gold loans. That part of the book, of course, gold loans and lending against fixed deposit, no problem at all. That's 0% moratorium. On MSME and affordable housing, MSME is more around 70%, affordable housing more closer to 80%. On microfinance, we are closer to 60%. So, Tamal, what's really happened is it's like a waterfall, you know. So, customers who had money obviously have paid us through the crisis. Customers who had money but wanted to wait for the lockdown reality have now come to the table. So, you can see everybody's collection is going up. There is a third element where there are lockdowns. So customer wishes to pay, I wish to collect, but I really can't reach out. We have tried digital. So digital has made a lot of progress in the last few months, but still not enough. So I think in August and September, we'll see a lot of areas where lockdown is very, very limited now, where the repayments will again come back up. I think we'll be left with two challenges, which is customers who really have a genuine issue in their business or their employment. And we will know that in full reality only in September, because many of the businesses will open. We'll see if they work as well, how their turnovers go back up, or many of them will employ the old people back, and we'll see how many people get employment back. So I think the true nature of what is the rump of the problem will be visible, I guess, in its real form in September, in my mind. There will be last minuscule percentage who will be opportunistic and saying this moratorium and COVID is a reason why we should never pay. That, based on our customer calling and interaction, will be less than 1% to where we have, because we've spoken to all customers this time. That's a very small percentage, but it won't be zero for sure. So a lot of work to do, I guess, in the next few months, Tamal. But to the point that Vasu made, it's a very important point, you know, that the repayment for us is so small that he doesn't need to work for a few months to pay us. You know, even if he goes back to 50, 60% or his first salary, I mean, we are essentially collecting anything between 1,600 rupees to 2,300 rupees. Very easy for him to pay us that money. So it's not a large sum. And as long as we have not over leveraged him, and at some point, Tamal, we should talk about the code of responsible lending, which MFI, the MFIN has introduced, and I would encourage Alok to talk at some point about it. If the customers are not over leveraged, which largely our books will represent, I think we should turn out to be fine. But a lot of work between now and, I guess, next 3-4 months.
September, you said, meaning you will get to know by October and November, right?
Yes, because see what is happening, Tamal. So we know the customer has a financial problem today because his shop is closed. That we are aware of. But when his shop opens, does he go back to his turnover by what time? Or does he have a more deeper problem? We will know that. So that's where.
So all of you, two unlisted and three listed, I think the same strain, same theme. You're saying that things are getting better. Like May was better than April, and June was better than May, and July was better than that's one strand. Another part is this: it's not a farm loan waiver that people are taking advantage of that. No, they know it's a black swan situation, and most of them, Ajay is the first person who said there will be some people who would not pay, but that's less than 1%. But by and large, people are not taking advantage of the situation and run away. They will all pay. So that's it. Alok, you run MFIN as a CEO. So give us your sense. You know these 6 banks, five banks, and you know even other SFBs also. So give us a sense on the SFB space. What is happening in terms of impact of moratorium? By and large, you agree what they are saying, or the others who are not represented today, you think their stories are similar or their stories are different?
So thanks, Tamal. On the SFB side, I think 5 persons have already given their version of what is happening. And if 5 persons have said something and which is almost 99% similar, it is very difficult for anybody, even if a person is critical of the sector, to say something which goes against what 5 people have said, and all agreed 99%. So that was on the lighter part. But as a sector, and I'm talking about mainly about the microfinance asset class, which the SFBs have, which while Vasu would have less and Sanjay would have very less or almost nothing of that. but other cases I am representing. So the particular features which have been identified by all these speakers, one, that the customer, the business with which we are dealing as an SFB, that is a real sector issues, essential items issue. These are not dealing with some luxury items. These are not Zara stores or Bentley stores, which you can say demand when we in economic terms when we talk about demand consumption peaks and troughs. These are the things which are affected, but the essential thing, the vegetables which we eat, the roadside snacks which we eat, the vending which we do, these are very essential things. And even from lockdown days, when the lockdown was in serious time, demand for these existed. Maybe the movement was prevented, so it did not work out. So totally agreed that the livelihood associated with the small ticket, real life sector issue based things is definitely getting into uh, full, I would say, normalcy. And in rural parts of India, because when I sit in Gurgaon and all of us are sitting in state capitals, we see there is a barrier, there is a movement barrier. We are scared. Hospitals are full. Media is giving all the stories. And I'm not saying that COVID is abated or something. I'm only saying that in areas, in rural areas where much of our clients are, or in semi-urban areas, when I talk to persons, like yesterday I was talking to somebody in Bihar, the situation in movement and business, small business is almost normal. Yes, initial month there was some loss of business, but now the businesses are coming back to normal. But still, I must say that on the recovery side, I have one observation that as we have been talking that we are moving up to 60%, 70%, 75%. But you have to distinguish that these are current month's recoveries, I think. If you take it from the moratorium period, which has been given right from March end to now, if we say the total demand is 100 crores, in that, I think recovery, if you see in total demand in the moratorium period versus recovery, or we are talking of the monthly demand versus the collections against that, these are two different ballgames.
Yes.
On that broad parameter, I would say moratorium, which was very essential, and considering the clients were hit, uh, as all speakers have said, 90% or 95% of clients and most of the institutions had given microfinance clients blanket moratorium uh, in the initial months. Now recoveries have started coming in, but of the 4 or 6 month period, if you see, I think the recoveries would still be around 50%, and there would be area demand. I don't have a handle on the specific number for it. So how that behaves in coming months when the moratorium is over, that would be a thing to be seen, what Ajay is also talking about, because there are two uncertain factors in it, which I must flag to it. One is I'm not bothered about the clients. I'm not bothered about the resilience of the clients in case of microfinance. Their livelihoods have already started, and I'm sure the past events have demonstrated they will bounce back. What I'm bothered about is two things. One, while we might assume that the vaccine will be out, and we have already hearing in media that the R factor is going down, R factor is almost coming at one level. It might, we do not know. We are dealing with, as Sanjay was telling, once in 100 years, I think more worse than World War II situation. So we have to be prepared for that. We do not know. We will hope for the best and prepare for the worst. On the medical, we do not know what will happen on COVID side. The second thing which people are generally try to not talk about it, but I would say that it is local level interferences. I'm talking about social unrest and all that. In areas we are hearing stories already that there will be some small time organization or some vested interest just trying to incite borrowers about saying that moratorium is there, or trying to conflate it with loan waiver sort of a thing, and do some mischief around that and try to create them. That has to be aggressively checked. And I think we require, while the institutions will do their best, what we require is the policy support. Whether it is at the state government level or at the central government level, we have to, and MPIN will work very closely with that on that part. So that part, because no other sector, you have seen big banks data. That's why when Vasu said 90% clients went on moratorium, and you said, oh, 90%? And I think one of the agencies, professional agencies, came out with figures of how much of the portfolio of whether public sector bank or private banks went under moratorium. So So you'd have seen in some cases in the mainstream banks, the moratorium given was hardly 10 or 15%. But we are dealing with institutions which not only go to the bottom of the pyramid, work for the real sector of the country, but also at the time of peak time of moratorium were sympathetic and went up to 95% of moratorium.
Sure.
So when things are coming back, let the policy support has also to be conducive,
Yeah.
especially
Thanks.
checking this diamond.
Thanks, Alok. Just only one supplementary question, just quickly, one liner. I wanted to ask you separately, but you raised it that there are certain pockets you will see that people are trying to take advantage of the moratorium. But this is not politicization. It's not political parties are inciting people. This is a law and order situation, right?
Yeah, this is I call that local level vested interest and mischief mongers.
Okay. So that I think far easier to tackle than if they're not political parties and all, it's pretty easy to tackle, right?
Yeah.
So thanks, Ajay. Thanks, Alok. So now that's everybody wanted to know what is the moratorium scenario. We have spent longer time. So now I have a quick little shorter time because there are many questions are coming. I want to ask you one thing, and maybe I'll start, Alok, now reverse order from you and all. So there are one is this. Vasu spoke about it, Nitin spoke about it, Bhaskar, you particularly spoke about it and all. It looks like that you call it whatever, working capital loan or not, but you seem to be happy giving some, what do you call it, the so-called top-up loans. Actually, if I am a borrower and I am ended up eating out my capital, you are trying to help me out, giving fresh money there and all. So can you give us a sense at this point of time, all of you, what is the credit offtake scenario? And are you going for newer products? Is there an opportunity to diversify, like gold loan? I hear everywhere, everybody talks about gold loan. There's a lot of demand there, and that's a fully secured loan. And when the gold prices are going up, etc., RBI, of course, the LTV, the loan value also, RBI has increased. So there's only one instance. So is it the time to diversify your product, or your credit uptake is primarily giving the existing borrowers fresh money? And finally, Alok, starting with you, and keep it brief, starting with you. Given a choice, would you recommend extension of moratorium for your clients? Alok, starting with you.
Hello. Yeah.
I'll go to the reverse order after that, Ajay.
Okay,
Yeah.
okay. So I will answer your last question first. I think consider the way the pandemic has spread out and the way the economic activity has resumed and the repayments, how they are behaving in the field right now. I think moratorium is not needed now. 6 months moratorium has been given. I think that's not needed. And anyway, restructuring and all that policy guidelines have also come. So that will be put into place. And now coming to your product innovation part of it.
Product innovation and the fresh credit, where is it coming from?
Yes. So,
and also you can touch upon, do we redefine the urban-rural landscape now? Like everybody says now, rural India is the growth story. And, so do we see that those who are urban-focused SFBs and all, they will bring down their focus on urban India and get into more rural because their the security is probably more than in urban India?
Okay. So
quickly, sir. Chota.
Yeah, so I feel I think there were some news items also talking about that urban portfolio will be affected and rural will be safe. My belief is that the asset class in microfinance, which we deal both in urban and rural, pertain to real life necessities, and the impact would a little maybe higher in urban because people have become more conscious after pandemic. But otherwise, there would not be a major difference. And as you have asked me to be specific, going on the product innovation side, I think, yes, this is a time to learn, but to introduce new products and try to test them out, I don't think that would be the right time to do that. We can test out, we can talk to the client, what do they need and all that. But right now, the time is to stabilize the operations, continue with existing products, and wherever needed, let us not be very touchy about top-ups and all that. This is all... if a client needs some money to kickstart the livelihood, we should give it. That is perfectly fine. So I would ask for consolidation and learnings from the field for future implementation, not now.
Okay. Ajay, your turn.
Tamal, my bias is similar to Alok's. Urban and rural will be marginal difference. Right now, it's a timing difference because obviously urban areas under lockdown. But at no point of time is their income scaled or urban economy dead. So I think we have to be conscious of that. I think being very rural based is also challenging, and we've seen famines and floods and the rest. So I think remaining balance would be right answer for us. I think secondly on what should we do next? I think entire focus should be on stabilizing your current business and your current customer base. I think once we achieve that, we should try something new. So I think first focus is employee safety, customer safety, getting your books in order, making sure everybody is comfortable. We know what the size of the challenge is, and then we take on from there. So that would be my bias on what we should take. So I think stick to the core, get everything right. I think fundamentally customers' needs will change. Come a little, for example, we can see a huge education in people's mind on insurance, for example. So I think getting more insurance focus will benefit. You rightly pointed out gold is a very big opportunity, but setting up gold takes a long time. So we do have a gold business. We have seen it really accelerate in the last 2 3 months to a very fast degree. So I think where we have businesses, we can expand. Doing new businesses not in mind. And frankly, where customers are, I must tell you, we have gone back to many customers saying, "Do you need money?" At least 30 40% of customers who are eligible and have been asked by us saying, "Do you need money?" have said no. And because they really don't see the business option right now, they don't have the clarity whether lockdown will come back or no. So I think customers are mature. Vasu mentioned this, or I think Bhaskar mentioned it. We have existing customers for a long time. They know us well. We know them pretty well. My bias is just stick to the core.
Moratorium, you would like to give any choice? Would you like to be extended? Would you like to have it extended, or is it August end? That's good.
So like Alok mentioned, the restructuring option allows you to give moratorium as part of restructuring.
Yes.
We certainly think some customers will need moratorium. If the shop doesn't open, lockdown continues, he needs time to recover, we will have to give him some moratorium. And the restructuring umbrella does allow that as one of the options. So certainly I think customers would need that, and we will handle that as we see them open up their businesses and come back in various shapes and forms to their livelihoods back in September, October, Tamal. Doing long-term extensions or doing a big change in the way we operate may spoil the culture. So my bias is to stay to the culture, stay to the repayments, make 2 years as 2 year loans, not make it 3 and 4 year loans. Do very small changes so that we don't end up disrupting what has been a well-established culture in the microfinance space.
Thanks, Ajay. Bhaskar.
Yeah, to kind of answer, moratorium not really required. I think we're done with it. There is a fatigue which is setting in. It's good that the customers bounce back. As far as urban, rural, absolutely agree with Ajay that it's a question of timing. It can't be that rural will do extremely well independent of urban. They are substantially interlinked. So it contributes only to 16-20% of the GDP. So it doesn't, that narrative that rural will help everything bounce back may not necessarily be true. But many of our income customers' households have multiple streams of income. So I think we have started seeing that bounce back happening, at least with one income coming in, and it will bounce back very quickly. Don't think that moratorium extension is required. What is really required is helping them kickstart if they require a little more loan. And I agree with Ajay that 40% of customers saying, I don't need a loan, but I may have a little difficulty in cash flow. But what will I do with the more loan what you're going to give me? So that I think is a good sign. So I think with August, if the moratorium gets over, probably we'll see a bounce back much sharper than we ourselves are anticipating.
So, Bhaskar, you didn't answer the question. So, the average growth of SFBs last year, I mean, the credit growth has been, I think, 35%. Correct me wrong if I'm wrong, Alok. So, if that's the growth, so where would the credit growth come this year? That's what I want to know. Is the new products? Sorry. Is it the existing people? Is it the existing people getting a fresh loan, call it top up, call it working capital loan, or is it existing people getting into different businesses, or you are wooing new customers, or you are getting for newer products? Give a sense. Or do we say that there's a flat no growth this year on the book size?
Yeah, I don't think there will be any substantial growth on the book size. Probably it will be 5 to 10% at best compared to last year. The credit growth as of now, our disbursements are virtually nil compared to what it was till June. July, we just started. We'll call it whatever by names, but the fact is that working capital will be required for the customer as they bounce back and their own confidence goes up. The strategy for us, I agree, is focus on existing customer. We have not really minded deeper. It could be different products, but with a similar set of customers. I don't think it's a time to really go into a different set of customer segment at this point of time.
Thanks. Nitin,
So slightly different point of view here. Moratorium,
please.
obviously, there is no debate. I think it's the same view, and I've said this earlier also publicly that we should not have any extension, and restructuring will take care of any necessity that arises because of the absence of moratorium. As far as new products are concerned, I think one thing that is happening for a lot of us, I can't say that for everyone though, is that because of all the liquidity measures, there is a decrease in the cost of funds that's coming about, right? Now that also gives us the chance to either do new product lines or also get into new segments. So some calibrated approach, if not immediately, through some tests and pilots, gradually getting into new lines of businesses, new product lines. Completely agree with what Bhaskar said, that first more relevant to your existing set of customers, because I don't think any bank would want a need of a customer being fulfilled by another lender if you don't have that product and you have the capability of introducing that product. And today I think there is enough data analytics and technology available to test and introduce these product lines quickly. The third point on rural and urban, I think we started this whole narrative sometime in April and May, when it looked like that there was no infection spreading into the rural markets, and everybody was seeing, especially in June, that the collections efficiency was higher in rural. And it did seem like that we've had a good harvest and good sowing and good monsoon, so rural will bounce back much faster. It'll drive the growth, and all those hypotheses was there. But in July, we've seen that the infection has gone pretty much to all the areas in the country. And now the gap between the collections efficiency of urban and rural is not very much. It's narrowed down. So if that happens, then it is not going to be whether it's rural or urban. It is probably going to be more occupation led than anything else. So if there are occupations which will have a higher degree of impairment and reverting back to mean, they will take longer, irrespective whether they are going to be in rural or in urban.
Okay, thanks. Very valuable input. Vasu, your turn.
So on the moratorium, no question. I think what RBI has done is absolutely the right thing. You go and support those customers who are not able to come back even after lockdowns are removed. Go and help them out through a rescheduling. The rest of them just come back and pay up normally. I think that's a perfect solution for the current situation. In terms of rural-urban divide, I think as Nitin was saying, there was this lot of sound on the rural being much better off than urban 2 months, 3 months back. But today the newspaper keeps saying the job losses in rural is now catching up very fast. And so the rural is not looking as if it's going to eternally, kind of do well. And the virus is spreading. That's a real problem. Forget the banking and forget repayments and moratorium. But the fact that the virus is spreading to rural is actually a much more serious health issue because of the level of facilities which will be available there. So I think more
Sure.
than anything else, I'm sure the governments will be focused on providing healthcare to those people in those locations. I think that will be the need of the day. And in terms of new products, etc., I mean that's depending on each individual bank and their DNA and their strategy that they want to follow. One could be saying that this is not the time to innovate, and somebody could say this is exactly the time to innovate. So everybody can have their views. At Equitas, we are really not looking at any new products because we have a complete range of products already in place. So for us, it's really the challenge is one of just focusing on the existing products and trying to see how do we grow that. So from our side, we are really not looking at anything seriously from new product launches or anything.
And book growth, you are also like Bhaskar, around 10% growth. That's the kind of new normal now.
See, book growth, I won't be able to give you guidance on that because we have not given a guidance to the public.
Yeah,
so
yeah,
far.
you are a listed
So,
entity, you can't.
Yeah,
but,
so
yeah.
we will not be in
Sure.
a position to give a guidance. The only thing is that the demand, the segment that all of us operate in, the demand, unmet demand is like unlimited. It's been unlimited, it's been huge. So the whole challenge is in terms of how much appetite do we have to do business. That appetite will be, I think, by and large determined by September. I think September is going to be a key month. And how our September pans out will determine what will be our appetite for business going forward.
Okay, thanks, Vasu. So Sanjay, you are the last. You started the first there. So this round, as you heard, that what's the outlook on credit, products, diversification? so on and so forth. You have the biggest book among the SFBs, right, in terms of loan book, Sanjay?
Yeah, so I don't know about the biggest one, but yes, we are close to now 30,000 crores with close to 6 lakhs customer.
Yeah.
So, Tamal bhai, three things, right? So I completely echo the views of my colleagues on this call that moratorium extension is not necessary. The restructuring will take care of everything. Banks need to be more flexible. Bank need to be more towards customer than to yourself. And we have to understand one thing that banking is not only about maths. In this time it has to be more emotional banking, which you can help and take the customer out of this crisis. I one thing more like what emergency credit loan scheme, which is guaranteed by government, is also helping a lot of customers to come out from this. So I think there's a lot of package available now. It's the banker and a customer to decide from 1st of September which product, which weapon, which way they want to take the help. But I'm pretty sure that putting all those in place, we will come out from this crisis, right? Second, in terms of the debate between the rural and the urban, I think,
Yes.
of course, we being in Bfsi for 25, 22 years, we've been always into rural belt. We are seeing that rural belt are not affected that much. Neither they were, honestly. They were actually talking to us that why we have been locked down, right? And this is also an overstate number that a lot of virus has gone to the rural markets and all those things. Rural markets are more distant. People actually by design have a social distancing. Of course, as Vasu told that we don't have medical facility the way the urban centers are, but those people are also not so worried about their life. Honestly, they are more fearless. They always go and earn on a daily basis, right? So we have seen a lot of activity on the ground from the core market. We call it rural markets as a core markets. So like tractor demand is huge. There is a good demand around our small business loan, the housing loan. Of course the vehicle loans are subdued, honestly, right? But core markets are performing well in my opinion. And one thing which has actually surprised me last 1 week or maybe last 1 month, that demand has just started coming back. There's a lot of demand for private vehicles, SBL, the housing, the business banking, for both. It's the emergency credit loan scheme and of course the new loans. And we being a banker, we are actually looking to go to a new customer, because existing customer, if he's not taken any moratorium, it's a cakewalk for us. We are giving them any kind of money, because if you are paying me all 6 EMI of moratorium, for me you are AAA customer, right? And we have that substantially very high number, correct? So we can go to them, but as Ajay told, there is no visibility around those people that how the whole economy will pan out, right? So one thing is very clear, Tamal bhai, that people are not looking for credit unless they are sure of. So I have seen that more and more good people are coming with a better civil record, and they're putting more equity now, because they also know that the loan they want to take, they have to repay it. And I think all credit goes to RBI and the government that in spite of this one of the 100-year event, they never had a waiver kind of story, which many people expected, right? Even HNI expected that. So you handle through all those things, which is not a long-term impact, a negative impact on the banking. Then the customer itself is become very cautious about his borrowing, right? So till June end, honestly, last call, we were not able to give any guidance on the future. But I'm very hopeful that come the October, the quarter 3 or maybe quarter 4, we can have a lot of normalcy, because the vaccine will also come. A lot of more protocol will be set in. The confidence of business will come in. Government is also pushing for many things, and I'm a firm believer that the government has to take lot of decisions which they would be sitting for 100 years. They would have to take in next maybe 1 year, honestly, because you can't move economy on the basis of your normal rules and regulations. You have to do something extraordinary. And I'm very hopeful that Mr. Modi government now, after a lot of things have been addressed, they will do something great around this, and that will actually kick off the whole process. Now it's quarter 3 or quarter 4, I do not know, but being a tech product bank, we are hopeful that we can do a lot.
Thanks.
And in terms of new product, like, gold loan is natural to us. We do that. Scale, I don't know how much we can get it, but we do want to launch credit card and all those stuff, because digital payments space you have to acquire. If you want to become a transition banking, you have to offer some new thing to customer. You have to be there in payment space. So we are doing a lot
Thanks.
of things here, right? Okay.
Thanks, Ajay. Yeah, we'll get back to you. We just
Yeah.
completed 1 hour. We are left with half an hour. And I have 2 rounds, so it'll be a much quicker round because we need to take questions also. We may exceed it by a few minutes if we are not able to close it. So it's a quick 2 rounds you want to have. One is, ever since you were born, I mean you were meaning the new entities, small finance bank, the 2 areas were concerned. The big challenge for them was, so credit was never a challenge because there's a ready-made market that you wanted to do. But the 2 areas, one, of course, the regulations, because the microfinance, even NBFCs who themselves converted into SFBs, they are not subject to those kind of tight regulations. So they found initially RBI regulations is very claustrophobic. And other, of course, even far bigger challenge was the liability. How do you generate, create trust and get people's money? Now I want to understand that the liability scenario, when State Bank of India is offering 2.75% on its savings bank, UCO Bank is offering 2.5%. Average savings, high street banks are offering about 5% here and there on your FDs, 2-year, 3-year FDs and all. So is the liability scenario has changed? I mean, till yesterday, I mean, the way of saying, you were pretty, just groping around how do I get people's money. Now, with the high street bankers cutting their rate drastically, and you also have cut, but not as much as by that same margin, is liability now no more a problem? Nitin, getting good money, liquidity flow from depositors.
Yeah, I don't think we've had a issue with the deposits inflow. And if you look at the rate reduction that the large banks have done or the small finance banks have done, it's in the same proportion. So if they were offering, let's say 6%, they've gone down to 5%. If we were offering 7.5%, we've gone down to 6.5%. So the proportion is the same. I don't think there is any difference in that. But yes, liabilities is not something that we were, starving for before all this happened, and it has suddenly made any big change, just because of the situation. I think liabilities was anyway coming because of whatever the proposition that we had for our customers, and that continues to be. I've been talking to a lot of customers also. So while there is rate sensitivity in certain segments, but now people are realizing the fact that yes, you're dealing with the bank for the last 1 year, 2 years, 3 years, and they do see the difference in the way we serve them versus some of the other banks that they deal with. So people are also moving out of this whole rate sensitivity issue, and that is perhaps the biggest reason why we continue to attract deposits. The second thing that also happened as an event was a Yes Bank moratorium. And that time there was a lot of hue and cry that, smaller banks will not get deposits and there'll be a flight of deposits. And we were saying very, very firmly and strongly that it is nothing to do with small or big. It is about whether you are a well-run bank or you're not a well-run bank. And our customers really believe that we are well-run banks and people will come to us. And therefore, we have not seen any problem with the deposits. And the rate of interest are always relative in nature. I think we have seen reduction in the
Thanks,
same
Bhaskar.
proportion.
Now, other contributing factor also is that the increase in the DICGC cover from 1 lakh to 5 lakh in February.
Correct.
That's the Reserve Bank.
Absolutely. That's been very helpful also.
Yeah, Bhaskar, tell us, is it much more comfortable on the liquidity data?
Very comfortable, Tamanda. The difference is that I think, as Nitin was mentioning, initial panic, all of us loaded up ourselves with a lot more liquidity than required. So we all even utilize a refinance limit, which was available for each one of us in SIDBI and NABARD. So maybe, depending on our own strategies, we are sitting with 15% to 20% of the balance sheet in terms of excess liquidity, which has its impact in terms of negative carry. I think each one of us are looking at it as an insurance cover and from a view of profitability. The focus, because of the excess liquidity and lots of flow of deposits, is tilted towards granular deposits. The DICGC cover certainly has helped. Earlier, if it was 1 lakh into 5 deposits in a household, now it can technically become 5 into 5 as long as there's a surplus to invest in fixed deposits. These things have helped. And we do each strategy. So we are not focusing excess on in terms of CASA. That requires substantial bandwidth in terms of physical presence of branches even at this point of time.
Okay.
So the focus has been granular deposits, which has been coming in.
Sure. Vasu, anything you want to say on the deposit front? It's pretty good. Cool.
Nothing much. I don't think any of the SOBs have had any issue on deposit at all. You know,
Hey, come on.
before we became a bank, seriously, before we became a bank, you know, we were also thinking like this. You know, now we can't borrow from other banks, and we have to raise our own deposit. Will people really come and give money to us? That's what I mean. All of us were seriously thinking, how are we going to manage that situation? But in reality, it's turned out to be very smooth. I think none of the SFBs have really any real challenge on deposit. Of course, we buttress the story by giving a rate which is more than the nationalized banks or the large private banks. All of us are giving higher rates, which is fine, because we also lend in a segment where we can absorb that.
Sure.
So we don't have an issue on that. So I don't think any of us have any issue.
Alok, you are a sort of third party, not an involved party. You said never, liquidity was always a cakewalk. Is that true? I mean, Alok? Alok?
Look, you're on mute.
Sorry.
Yeah.
I
said, Vasu said liquidity was always a cakewalk. There's never any problem at all. Very quickly.
Well, I would not go to the extent of saying that liquidity was a cakewalk. Liquidity was a challenge, and will continue to remain challenged, because I feel that when the SFBs had almost in the stabilization phase, when all these OPEX costs had stabilized, the core banking costs and all the technology costs had almost being stabilized, the pandemic has hit. So I was thinking that from this year on, the takeoff time of SFBs will start, but the pandemic will a little bit delayed. But I don't agree that deposits will remain a challenge. There are two types of, if we segment, like in market segmentation of the clients, depositors, I would say, these small clients whose account balances are less than 2 lakh, 3 lakh, or whatever deposit insurance cover, and those who know and trust in you, that's fine. That deposits will come. And the corporates who understand what somebody said, that Nitin Eisen said, that it is not about large or small bank, but it is how well run and capitalized bank, who look at ratios and financial ratios, they will also be okay. But the medium segment, which goes by the brand name, that also is very huge in India. That is still the big challenge.
Thanks, Alok.
And unless that is tackled, it is not possible to solve the liquidity problem.
Sanjay, quickly, is getting deposits a pretty easy job now these days, COVID days? Quickly.
So Tamal, I have a different view. I have a very different view here, honestly,
please,
because the size and the scale matters, right? So I would say, the first 10,000, 20,000 crore of deposits is no brainer, honestly. But if you want to really raise money at a level of 50,000 plus, where the people will really want to have a trust and a brand. So SFB is not a brand, honestly, right? And what happened because of PMC, because of Yes Bank, because of the all Bfsi, HFC crisis, AMC crisis, everybody questioned us. My colleagues will agree that every time any bank has a issue, we were supposed to answer that why and how SFBs are secured, right? So I would say the two initiative. One, the RBI governor himself coming and saying every scheduled commercial bank in this country is safe. That was very loud statement, and we won't let any commercial bank going, wrong way. Second, as you know, the guarantee up to 5 lakhs. But every SFB honestly has to work on their brand and their engagement program, because raising money through FDRs is more of a transaction money. So you can reduce rates there, you can do a lot of things, but how to build how to build SA, which is more of engagement money. So at AU, honestly, the 80% of my time goes into the building the liability franchise. I just think why customer will deal with me, right? And when once you HDFC Bank, you have Axis Bank, I say they are such a humongous, such a big franchise with a lot of power around digital, a lot of power around brand, a lot of power around this. It's so difficult to get the engaged customer, right?
Thanks, Sanjay.
So it's a long way for every SFB, and I'll be very happy to take universal license to build liability, honestly.
Absolutely. That's my question. Ajay, you are the last speaker on this.
Yeah, so deposits and liquidity
are far easier now. Yeah.
So deposit and liquidity, Tamal, no more a problem. Having said that, I do know that every time there is a crisis in the banking market, whether it's a PMC or an ILFS or whatever else, People do want to get nervous about what happens to banks, and they've seen a PMC bank event, so they were nervous and they will always be nervous. So never say never. We continue to build service, continue to build brand, and every year passing, the small finance banks are evolving. So people are saying that, listen, I was questioning this bank in 2016, 17, but they're still around, they're doing well, so maybe I'll start banking with them. So I think as every year passes, we'll gain trust. I think we should remember that history is only about 3 years. So the path evolution is real, and we should all be cognizant of that.
But today is better than yesterday, right? You are getting more money.
Today is flush with liquidity. It's brilliant. Okay. Customers are really in the bank, and like Nitin mentioned, we have kept cutting our deposit rates. We are still attracting good money, but okay. Say that this is something we wouldn't focus on, or if we are behind it. I think that's going to be always top of line for us as an important feature.
Ajay, hold on. And the next question is to you only. So from liquidity shifting to capital, there have been talks that the way SFBs have been growing 35% plus, and now you will be saddled with your NPAs, so it will be difficult. You need capital. That's a larger issue. But for Jana and for Bhaskar Babu, even for regulatory requirements, you need to enter the market through your initial public offering. So can you give us a sense, both you and Bhaskar, in a small way, whatever you can this thing, is it there, like, are you engaged with the regulator to extend the timeline because of this black swan event, or is it like the as usual, in the next few months we'll see you entering the market?
So Tamal, honestly, last few months have been around just managing employees and customers. Haven't really focused on anything else. We are doing all the work required that you need to get the books ready, and so we appointed the lawyers, etc. I think now there are a variety of areas around where SFBs have to really engage the Reserve Bank. I think we'll certainly do that now. We have an association set up, which has only happened last month. So we'll put all the issues together and then seek their counsel.
Bhaskar?
So there are ongoing discussions with the regulator, as Ajay mentioned, even through our association, which is just a month old. But we are doing what it is possible with us, which is still the DRHP filing, and then there is markets. I'm sure the regulator will be open, considering the COVID situation, for any dispensation or extension, maybe. Okay. But we are doing what it is in our hands at this point of time.
Sanjay, anybody else? Because we have seen people, even if you do not need capital, you are entering the market. You name it, whether it is Kotak, HDFC, Axis, ICICI, HDFC Bank. Everybody, in the private sector, they are raising capital. RBI governor is repeatedly emphasizing financial sector stability, and he said, look, NPA, you will grow, that's given, but you go and pick up capital. So Sanjay, any plan for fresh capital raising?
So, honestly, Tamil bhai, you had to raise capital either to protect your balance sheet, or you had to be so sure about your growth on it.
Yeah.
So I'm not sure about both the things as of now. So, so we are around 20% capital adequacy. We have a lot of scope around tier 2. We have one investment which has worth around 750 crores. So at a point of time, I would say that AU is well placed in terms of their capital. Let's see how the quarter 3 works out around the whole impact of this pandemic and how the growth prospect would be. So, and we are keeping the very close eye on the RBI advice also. So, I think we would see action around quarter 3, quarter 4.
Thanks. Nitin and Vasu, you already raised capital, so I'm not asking you that. Quickly, since we have time, just another 1 minute each I want you. Maybe Nitin, you can start with this. The entire, the way of doing business, which Bhaskar hinted at, and some of you said that you are saying that demonetization give a kick start to digitalization, but it did not last long. But now COVID has given a different kind of impetus to digitalization. Okay, the customers are on their own now. They are preferring digital because people are scared for social distancing and so on and so forth, to sitting at home and using your mobile as a bank. So each of you can give us a sense that what would be the new normal in terms of microfinance lending in this new digital push. Nitin, because you are a techie, so I'm starting with you, and each of you just 1.5 minutes, and then we'll take the audience questions.
No, I don't think there is going to be a situation like what we saw during demonetization, that the behavior at the customer end changes. Yes, that will happen. That is happening already. But this time, I think, is a great opportunity for all the transformational work that we could have done on kind of reimagining the whole business or the business model or the way we serve customers, and that is very clearly undergoing a change. So more than how the customers will change their behavior, which obviously will happen, I think the banks itself will also undergo a change in their business model. That is very clearly coming out as a logical outcome from all this.
Vasu,
So on
tell
the
us the new digital world in the microfinance segment.
See, in microfinance, we are already a paperless bank. I mean, before we became a bank itself, we are completely paperless in terms of all tab onboarding and things like that. So and we were always post demonetization last 3 years, we never made disbursement in cash. It's always been through a bank account only. But the only thing that now people are talking of is whether the collection, which is done at a group meeting, can be done by digital instead of cash. Now, so there are a lot of implications of that. Cost implication is that we'll save money by not handling cash, which is all fine. But the point is that if some customer is enabled to make a digital payment and she could make it the previous day itself, let's say, then will she be motivated to come to the center meeting at all? And if people don't come to the center meeting, will the concept of joint liability group or the social guarantee, social obligation that comes out of a JLG, will that survive that kind of a model where people may stop coming to the meeting simply because they have already paid the money, so there's no need to come? So we will be watching the situation, and we'll be very happy for others to experiment, and then we'll keep watching how it works. We'll be probably the last to try and digitize that part.
And it's a very, very important dimension that you are adding to the debate, because microfinance is all about connectivity, human connect. Technology can be an enabler, but not an object by itself. So, Alok, being the MTIN CEO, what is your advice?
I would not say advice, but what I see based on experience, I entirely agree with what Vasu has said. See, as we say in cash operating structure, that cash in, cash out. So now cash in clients, when we disburse, is almost 95 to 100% is digital. It is going in the bank account. But cash out, that is pulling it back from the client in form of repayment back to the institution, that also becomes digital. I think the whole bedrock of microfinance will not be there. We have to give an option to the client. If somebody is not comfortable, or somebody is sick, or somebody has migrated or gone somewhere else, they can make digital payments. But completely digital, I think that's still a far cry. I think here talks about cloud-based delivery and all that, but that's still I feel a little bit.
Sanjay, you are not into big time microfinance, but what's your view on the digitalization?
No, I think it's non-debatable, Tamal Bhai. I don't think, honestly, if cash is out in the system, right, why do you need a branch then? So, Nitin would be more right guy to ask because he comes from a digital background. But whatever way I have understood in the last 3 months is this, that a lot of adoption has happened. Even every housewife is also using Zoom calls to get entertained, right? Or maybe Ludo games and all those stuff. So I believe the video banking, the video KYC, the transition banking through all those digital means, the QR codes, like you heard what RBI has coming out with now on payment system.
Yes,
so I
yes.
think next 10 years, other than the brand awareness, and of course, because we are very bullish on the QR code now. We have already put in around 1,000 QR code in the whole core markets, right? So, and I know everybody will do in the due course of time that credit card and all those things. So once the cash is gone out, the only option is to do the digitization, right? And I can do, right, like what we have done in last 3 months. We are doing the client meeting on the Teams. So my team is not going and meeting customer at his home now, right? Because the guy is on the phone, the mobile, the smartphone, and I think next 10 years is huge. It's close to 4,000 days. So I really believe that a lot of digitization product, offering the use, adoption will become so easy. that
Okay.
even a last mile also will able to talk to me through his smartphone, right? So I am very gungo that if AU has to become big or any bank has to become big, they has to think about 2030 than anything else.
Okay. Ajay. Ajay,
Um,
one caveat. I don't want you to take a 1 decade view. You tell me now what's in. Yeah.
I think two things, Tamal. One is the banking side will get a lot more digitalized very quickly. Video KYC, like Sanjay mentions, uh, that will
No,
happen.
tell us what you are doing.
What I am doing is very simple. So every customer in Jana now has a QR code where he can pay purely, and that's a great work done with NPCI and the bank. Similarly, we've got Bharat Bill Pay. We've got options to pay through UPI, other methods. I mean, we have got everything possible where a customer can pay. There was no incentive for customer to do it in the past. I think COVID has given him the incentive. So now the next job is to just make sure that he gets education and he forms an habit. I agree with Alok that the high touch business, we may not be able to eradicate cash completely. Because their income is in cash, they deal with cash, it'll take a long time, but we'll certainly see some moves toward that direction. What I think will change also, Tamal, is, and where we are focused on, is getting him to bank with us. So typically, microfinance customers, when they deal with SFB, end up being an asset customer. I think with what's happened during COVID crisis, with digitalization, we will see them using SFBs as more from the banking partner also. I think that will also change.
Okay. Bhaskar, last word is yours, and then we'll get into the audience questions. There are many questions. Yeah.
Yeah, Tamal, I think it has been happening slowly, but it's going to happen suddenly. There will be discontinuity. There is no point in kind of stating that touch means that physical touch. So today, the entire conference today is happening in Zoom call. We're all comfortable. Same thing is going to happen. The meetings may happen, and it will not be very far then when the meetings can happen also digitally. So we are all collecting now 70-80% without meeting the customers in a group. So it has been a fear factor that if you don't meet, everything will collapse. May not be. My view is that probably next year when we have this meeting, 60-70% of that probably will be digital.
So you are not agreeing with what Vasu is saying. The bedrock of microfinance is the connectivity and that the group meetings. You are saying no, that group meetings can be substituted with the digital way, right? That's what you are saying.
Yes.
Okay.
Yes.
So it's a reinventing microfinance in some sense. All right. Thank you, gentlemen. I think we had many more things to discuss, but unfortunately, we are running out of time. We have 8 minutes left, and we can exceed by a few more minutes. So questions, many questions. Let's pick up. Some of them already been discussed. There's a specific question to Alok Mishra. Gentlemen are asking, do you think that SFBs are emerging as a threat to the public sector banks, to their existence?
Well, I would say that I wish it would be, but still it is a very far cry. As we heard that the entire 10 public SFBs would be somewhere around, I think, total assets under management would be 80,000 crores or something like that. And one public sector bank would be large enough. And now we are going to see more consolidation as what is the policy intent is that we will have 4 or 5 big public sector banks. So not in that sense, because the business model and the both on the liability side and on the asset side of public sector bank currently and SFBs is entirely different. I think they would be more of a challenger to lower on the pyramid of private sector banks first before getting to that PSB stage. And by the time it goes to that, the entire banking sector in India would change.
Thank you. One question, whoever wants to answer this, please tell us, has migration from urban to rural India affected your collection efficiencies in urban pockets? Who will take that question? Nitin, Ajay, Bhaskar, anybody? It's a very relevant question. That
I don't think, we have not seen any impact of that at all. Largely because, in microfinance, customers are people who have a livelihood right next to their place of living. So they can't just shift away. See, this migrant population is all about the casual workers who were working in certain sectors on a casual basis and they just went back. But in our cases, so normally we see for a livelihood, before we give a loan. At least in our case, it's not been an issue at all as far as we are concerned. At least.
Anybody else want to take that question? The question is migration affecting people, the workers leaving urban pockets, the construction workers and others and all, is it affecting your collection in urban India? Anybody wants to take this
So comment,
question?
yeah.
Yeah,
So I think
Sanjay.
it impacted it just for maybe first quarter, So our feedback is that, now even the lot of entrepreneur has gone to the villages, are getting back their labor back to their sites, even a lot of people has come back in the month of July and August because it's largely 3 months, more than 3 months. So there is a shortage, there is a impact of migration, but I hope by quarter three start, we'll be seeing absolute normalcy around availability, because in the end we have 1.3 billion people, right? So we will manage all those things.
Okay.
So, Tamal,
Yeah. Ajay?
two things. One is there'll be an interstate and an intrastate. I think intrastate is returning first. So I think that's where the repayments will come back. Interstate will come next. So I think there will be a timing issue where migrants are interstate. We've checked our books. This is total migrant population, both intrastate and interstate is less than 4%. But certainly there'll be a timing issue where interstate needs to come back. And like Sanjay says, they could come back in Q3 or Q4. We'll have to give them a bit of time. Talking to the customer doesn't look like it'll be a big issue, but I would assume there'll be a marginal challenge for sure.
Okay. Ajay, this is a question for you. It's not meant for you, but I'm asking you because you mentioned that. You said that your focus is on affordable housing. It says that how is the growth in the affordable housing segment in this COVID time?
So I must say that for the month of July, our affordable housing business is back to about 50-60% of pre-COVID levels. I do think people have begun thinking about where they live, the hygiene factor, because working from home and thinking about their homes and their safety and their surroundings have become real live issues. And I must say that the real pickup in affordable housing back to pre-COVID levels of 50-60% was a bit of surprise for us. But seems to be a very good business, both from a demand angle, but very importantly also from a repayment angle. On the repayment side, Tamal, just for everybody's benefit, we do find that the smaller loans are paying very well. So in fact, there's a straight waterfall where the smaller the loan, the better the repayment. As we go up larger into the less than 5 lakhs is the best repayment, 5 to 10 lakhs is second best. It's gone like that. So very interesting learnings in the COVID crisis.
Okay. There's a question again on the product thing. How is vehicle financing doing in the current situation, going up or down? Both Vasu and Sanjay, if you can answer this, because you two have exposure to this. Vasu, vehicle financing.
So we are into commercial vehicle finance, and so there we see we have about 25% of our book is in commercial vehicle, out of which about 6% is heavy commercial vehicle. Now we definitely think that the heavy commercial vehicle customers are the ones who will probably struggle to come back quickly. Whereas the light and small commercial vehicle, we don't really see much of a challenge for them. The availability of goods for intracity and intercity continues to remain high. Rural to urban movement of goods because of monsoon being good, second year running is continuing to be good. So the small and light commercial vehicle, the demand remains strong. So I think there the availability of goods and the usage of vehicle remains good. It's the long haul guys, the truck guys who probably will have much longer time to come back. And that is not even because of COVID. Even pre-COVID, they were also already in some level of trouble. And so I think that this COVID has just extended the trouble by another 6 months.
Sanjay, vehicle financing?
Yeah, so we do every vehicle on the road from 2-wheeler to 22-wheeler. So the brighter side is 2-wheeler, the personal use vehicle, whether it's new and old, the small commercial vehicle like Tata Ace and Mahindra pickups. So this is close to our 60%, 65% the book. So we are finding that, and as I told you, I'm surprised to see the demand coming back, and we might be doing around 50% of last year business in the month of August, right? So, and pretty fine there, right? And their collection efficiency is also showing good numbers, right? So it's corresponding with the usage of past also in the COVID days. The heavy commercial vehicle, the light commercial vehicle, being both, the load and the passenger are facing serious challenge. there is an running because in existing book, you are seeing a lot of activity happening around SCV, but a lot of challenges also being posed to them because nobody's extending them credit, neither no fuel credit, no tire credit. So their entire income is going towards their management of day-to-day expenses, right? So they are all taking more of a moratorium, right? And taxis, of course, not much of activities coming. So I would say we are 25-year organization around this book, so we can manage it. And we are pretty fine with the kind of moratorium plus the kind of demand we have seen in last a month so.
Thanks. Alok is a question for you, Alok.
Yeah.
Of course, nothing to do with COVID related or business thing. Is it that do you see, this is not your question, I am asking you the question. The question is, do you see more NBFCs applying for SFB licenses? Because as you know that it's on tap, but I'm not very sure how many have already applied. Probably it's one or two. But do you see like it's still a business which is enticing business and the NBFCs should try to convert themselves into?
Well, it is a difficult thing to answer in public because I can give a logical answer to it, but whatever the plans individual institutions are privy to it, it would not be fair to disclose it.
No. Do you see them coming? Is there any reason they should come or they should not?
No, that's again an institutional choice. If you want a more regulated atmosphere with lower margins and maybe, but a little bit of more flexibility on the product side, you're okay with that, that's fine. If you want to be tightly regulated, but on funding side, you are assured that almost on priority sector, and you have a little bit more leeway in pricing, you want to go on that side, it's an individual choice. But still there is a fair amount of interest, but I think the interest would get a little bit delayed because of the COVID impact. And after 1 year, and people are also watching how the current SFBs will come out of the crisis and what will be there. So that's it's almost a standstill.
Thanks. Many more questions. I'll just pick up two. One is a slightly cheeky question. It says that it's very encouraging to see the bankers are very optimistic. But curious to know, do you have a plan B if things don't normalize as early as you are expecting? Anybody? Nitin? Anybody wants to answer this?
Yeah, obviously we'll have a plan B. It's right. I think in business you need to have different
B,
scenarios.
C, D, all.
Yeah, I mean, these are based on scenarios, and scenario planning is very intrinsic to running any risk-based business. So I don't think there is any need for anybody to imagine that there is only one highly optimistic scenario that's being thought of. At all points in time, you have multiple scenarios, and we have to prepare. Like Alok mentioned, we have to hope for the best but prepare for the worst.
Okay, there's one last question which is difficult to stomach, and I don't know whether any of you would like to answer this. Is that what would be the credit cost? Like, there is moratorium and there is the Reserve Bank of India allowed restructuring and all. But do you have any ballpark number you think that NPAs will be, not about particularly your bank, but overall SFBs as an industry, as a banking segment? Would anybody like to guess what would be the NPA scenario? As you have noticed, the Reserve Bank of India's last FSR financial stability report in July, it mentioned about that NPA would go up, and the worst scenario, it could go even 14%. That's what it said. So anybody wants to take a guess, including Alok, what would be, this is the last question. What would be the 2021 March, what would be the NPAs of SFBs?
So that's a guidance. So we'll have to hold that for.
No, not your question. Not as about. I'm not asking for any particular entity. I'm talking about the industry.
Okay, so if you want me to talk of generally from the entire SFB industry, then kind of continuing with the previous question, the person who asked the previous question, you all sound very optimistic. Do you have a plan B, etc., etc.
But there are two different persons asking this.
Combining that and this, really, I think not just us, I'm sure all the SFB, simply because of the segment that we serve, the kind of customers that we serve, the kind of relation that we have built with them over so many long years, which Bhaskar Babu also kind of referred to and all that. I think we are all optimistic that our customers will actually come back very fast, because all of our customers, not just me, but all of our SFB customers they're all into daily use products and services. So their ability to come back fast is high. So I think if we are remaining optimistic, but if you ask for a credit cost or a plan B kind of stuff, our entire focus is collection today. Entire focus is collection. Now come September, if our collection comes back to near normal, and in October we are able to repeat a near normal collection, then November, December, we probably start looking more normal in terms of business focus. And if that doesn't happen, then we continue to stay focused on collection. So I think it's a question of combining the last two questions. And by and large, I think all of us will not have too much of issue this time around. But we will be heavily focused on collection for some time to come. That's for sure.
So, anybody wants to add anything?
So on a lighter note, Tamal bhai, I want to say we are already working on plan B.
Okay.
Because
that's collection.
No. Pandemic is a plan B, right? We never thought through.
Okay.
The guy is talking about plan C now.
Okay.
So what happens? So seriously, honestly, as Vasu told, we have to live every day and build our whole structure around risk, governance, compliance to manage all those things, right? So no straight answers, and just go and live every day, honestly.
Okay, Alok, straight answer. Any digit you have in mind? 5%, 6%, 7%, double digit. What would be the NPAs of the industry?
Too many uncertainties around. It is like asking give me the date by which vaccine will be there.
Oh, okay, fair enough. So with this, I have only one line answer from each of you to ask the last thing. But before that, gentlemen, thank you, all of you, Ajay, Nitin, Sanjay, Bhaskar, Alok, and Vasu. I think we have a pretty animated discussion. So the key takeaways are, I think all of you are saying that things are getting better. Things are getting better. Every month is better than the previous month. You are hopeful that things will get even better. You are seeing that by and large people are not misusing it's like it's not a farm loan waiver. There are some miscreant in certain pockets, but there is no politicization of moratorium and inciting people not to pay up. You are saying that you will hold on to your credit growth, but the focus is primarily on collection and make sure that the book is in good health. And at the same time, you are also looking for newer opportunities for secured loans like gold loans and affordable housing loans, and even selling insurance, etc., etc. These are all the COVID time new products talking about that. And of course, the main theme is this also. You are seeing a great degree of shift to digitalization, and the very core, the bedrock of microfinance, which is the group-based lending, you are saying will not be threatened, even though if we embrace digitalization. And finally, you don't agree the urban-rural divide. In fact, Mohammad Yunus was in India, not in India, was on a webinar in India a couple of months back. I heard him saying that the actual story now will be rural India. There is a massive opportunities in rural India for credit growth. But you exactly do not agree with that. You are saying it's urban-rural. It's more or less the same thing. So with that, gentlemen, many thanks to all of you. Just I want one liner for each of you is a kind of wish you have, because Sanjay continuously given any choice, he was thinking RBI and Narendra Modi and government, they are doing so much, they would expect so much, etc., etc. So you provoked me to answer this, and you have been the first person. If I ask you to one thing that is required for SFB, either from Reserve Bank or for Government of India at this point of time, what will you look for? So Sanjay, Nitin, Ajay, all of you just say one line each. That's the end. I'm not going to end anymore. One thing that the industry is expecting. To carry on.
Honestly, so you want to answer? You want me to answer this?
Yeah, first one. Then each of you just one liner. One line.
I would say give us universal license as and when we do our 5 years.
Okay, thank you. So on 27th at 10:30, RBI governor will be there. You can tell him that. Nitin.
No, just one thing that I think has been spoken about. We just need a policy framework to make sure that we don't go down the path of loan waivers and political interference. That is the one support that we certainly need, both from the regulator and the government, state and central.
Bhaskar, one thing that you would like? from RBI and from the government?
I agree with Nitin of this. And then one, if any fresh small ticket loans of some size, if it can be partially guaranteed or substantially guaranteed, that will be one ask from me.
Ajay? Ajay?
Yeah, I think, it's a crisis which is 1 in 100 years or whatever else you want to classify it. It needs a different answer. More of the same won't work. So I think it's time that we looked at SFBs and the whole microfinance arena, how it will drive the economy and give it a special boost. And it could be in various terms from what Nitin mentioned to Bhaskar mentioned, but I think there is policy work on how do you drive the bottom of the pyramid to be a bigger contributor, both by government and the regulator.
Vasu?
So I have two sentences, one from RBI, one from government.
Sure.
From RBI, please help us get out of the the issue of promoter holding. We are all stuck in it. 7 out of 10 SFBs are stuck in that problem. So please help us out of that. That is one from an RBI perspective. And from the government perspective, they have recently changed the definition of MSME 1st July effective. And that has taken away almost like a significant part of the customer segment of SFBs. It's taken it out of private sector classification. And yet these are the customers who are the worst affected. They are the most, they're the least financially included. And we are actually going around and taking a lot of efforts, putting a lot of efforts to fund them and get them into the inclusion space. But because of the definition change of MSME, we can't classify them as PSL. And that could mean somewhere the fund flow will also reduce. So please help us out on that redefinition of the MSME.
Thanks, Vasu. Alok, last word is yours.
So I would not get into the specifics of SFB, but on the
Just
policy
one
front,
sentence.
yeah,
One sentence.
okay, just one sentence. Don't get into all those convoluted schemes of interest subvention, this, that, and all that. For the policy part of it, give a supportive policy framework to the institutions and let the markets function.
Thank you, Alok, Ajay, Bhaskar, Sanjay, Nitin, and Vasu. We had quite an animated discussion. We exceeded time by 10 minutes. We could have gone even more, but we can't anymore. Thank you, audience. So this is the third in a series. On 21st, we'll have mutual fund conference around the same time, 5 o'clock. On 26th, we'll have insurance. And finally, the culmination and the last day on 27th, that's the morning, 10:30, Reserve Bank of India Governor Mr. Das will address his keynote address, and then we'll have a conversation with us. And of course, then we'll have the big bankers panel. Stay tuned. Thank you. Stay safe. Very good.
Thank you.
Thank you.
Bye-bye, guys.
Manish, over to you.
Bye.
Thank you.
Thank you, Tamal. Thank you so much. Pleasure.
Thank you, Tamal,
Thank
and
you.
a big round of thanks again to our panelists for this insightful discussion. Thank you, Jana Small Finance Bank, our partner today.
Thank you.
Us to the halfway mark of Unlock BFSI 2.2. Imprint virtual events have been helping us manage the webinar setup. Good job, guys. And thank you to the audience for joining us today. As Tamal said, our next session is on mutual funds the day after tomorrow. A preview is on your screens now. A lot more sessions, a lot more excitement still to come in Unlock BFSI 2.2. Time to say goodbye. Have a great evening and see you again.
Thank you.
Thank you.
Thank you.
He's
Thank
making
you.
his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard.